Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 19, 2016. This week was pretty much a mild week with stocks, bonds, gold really going nowhere. Next week, however, we have quite a bit of market moving events with US and German GDP, Japan CPI, and US durable goods report. Also, Governor Kuroda and Fed Chairman Yellen are going to speak. Yellen is at the end of the week. Also, we look at XLF and IYR, which are getting a divorce. I'll explain what I mean by that. Bonds are also explained went nowhere this week. Dollar did drop versus major currency, and we'll look in more detail at euro, pound, and yen. As a result, gold really went nowhere as well. Oil is very overextended to the upside, and the natural gas is at support. So first of all, I want to direct your attention that next week we're going to have quite a bit of market moving events. Governor Kuroda is speaking on August 23rd. There is a German GDP release on August 24th. There is a Japan CPI and US durable goods report on August 25th. US GDP is reported on August 26th. And next weekend on 27th, 28th, Chairman Yellen is going to be speaking at the Jackson Hole event. So lots of market moving events next week. This week was really not much that happened. We did hit an all-time high, and actually we did hit the all-time closing high. Now last week I said that that's unlikely. Clearly that did happen, but we did close below the all-time high, so that's what I think matters more. This chart, this is S&P 500, ETF SPY. This is clearly a bullish chart. In other words, I am looking for pullbacks within an uptrend, and I'm looking for buying opportunities. I am not looking to short this chart under any circumstances really right now. Now, if we do get a pullback, there is good support now at the 50-day moving average, this red line, and of course at the previous peaks around 212, 210, etc. Here is a little bit longer term chart of S&P 500. Really shows the same picture. This is one of my proprietary index, market breadth indices, and it's clearly in a bullish territory. So again, I'm not looking to short this chart at all. Down below here we have percentage of stocks above the 200-day and the bullish percent index, and they are also very much are in the bullish territory, both over 70. So vast majority of stocks are in an uptrend. So this translates into a relatively, I think this is a strong bullish market right now. This is a weekly view of S&P 500. Again, we hit all-time highs, and let me see, I think these are all-time closing highs. Well, they were closing highs, but not on a Friday basis. So intra-week we did hit all-time high. This is a very strong move from 1991 to 2183 or whatever. That's about 10% move. So certainly we are, overdue for some sort of a pause. And next week, as I said before, there's lots of market moving events, so this could be an excuse for shorts to come in and attempt to push the prices lower. So again, I think there's a clear breakout right now above this levels, 2134. So a retest of those levels is certainly not something out of the ordinary. And in fact, it will be a healthy thing because we need to kind of work off this overextended conditions and then possibly continue higher, depending on where support will be found. Here's my prediction for next week. Actually, first I wanted to show that we are basically had two trading ranges. Trading range here in July, beginning of August, and then we kind of broke out a little bit higher, and then we had another trading range. Now I think that this line here at around this is S&P 500 ETF, around 219.50. I don't think next week we will see a close above it. We might come up and touch it, but I don't think we'll close on a Friday basis above that line for S&P 500 ETF SPY. We'll see where it goes next week. Another thing I wanted to direct your attention to is we're going to have now 11 major S&P 500 sectors. So they're going to make real estate an official separate sector of the S&P 500. And these changes are going to be taking place rather soon on September 16th, so in a few weeks. So what's going to happen is basically XLF is going to divorce from IYR. Well, IYR technically is not S&P 500, is not SPDR, but in any case, they're going to remove REITs from the XLF. So this is going to be a major change, and this hasn't happened in many years. So in other words, XLF financials are no longer going to have real estate folded into it as a category. So now we're going to have XLF and IYR separately, or real estate separately for one another. So let's look at XLF ETF. Now remember that up to this point we had real estate folded into financials. So actually the financials are not doing particularly bad, and I wonder again if it maybe has to do with real estate being in this. But this we'll see basically where it goes once the divorce is complete, so to speak. But actually XLF itself is not particularly doing poorly. These are close to 52-week highs. In fact, this is a weekly chart of XLF, so we're not that far off from 52-week highs. You know, we're let me see. Or rather, these are all-time highs. So about 3% away from all-time highs. So, you know, financials are not doing particularly bad. So that's actually a good sign for the general market when financials are also doing really well. But again, I wonder how much of that is real estate, because real estate has been really one of the leaders, and these are all-time highs. And again, this is clearly a bullish chart. So I'm only looking to go long this chart and not looking to short. And here's a weekly chart of real estate, and this one tells a little bit a more clear picture. We had a breakout. You can actually clearly see it. It's a big white candlestick right there with a breakout to all-time highs, and then continuation higher. And now we're looks like a pullback, and possibly we're going to be retesting this this breakout, which is again a normal behavior for you know, any kind of financial instrument. And again, as I said, next week we're going to have quite a bit of events. Specifically, Janet Yellen will be speaking, and most likely she'll be addressing the interest rate issue. And of course, real estate is a little bit, but not by much, a little bit more interest rate sensitive than the rest of the stock market. And this is TLT on a daily time frame. Really nothing much has happened. Basically, we broke out to all-time highs, and we've been kind of correcting back and forth. This could be a triangle consolidation, and this is a bullish chart. So if we break out above this triangle line, in fact, let me draw it in so that it looks a little bit more obvious. You know, if we do get a breakout, let's say above like this highs here, so about 140, then certainly all-time highs could be again around the corner. This is a bullish chart again. This is a TLT on the weekly time frame, all-time highs. So again, breakout, and this could be like a flag consolidation, or like I said, maybe a triangle consolidation. And if we do, breakout, then it calls for further all-time highs. Again, these are TLT, so this is more sensitive, interest sensitive than, of course, it is interest rate sensitive security. And again, Janet Yellen will be speaking um, actually next weekend, so there could be some more extra volatility in the bond universe because of that. This is AGG, more diversified ETF than TLT, very close to all-time highs. Again, we broke out to all-time highs, and now we're just consolidating in a sideways manner without really dropping significantly. So this is kind of like a correction through time. If we do, again, and it's very easy to see all-time highs rather soon. It won't take much, in other words. And here's the same chart. This is a weekly chart. Very strong move here, but again, we're kind of correcting sideways. So it's really difficult to say what's going to happen in the future, but this is a bullish chart, so I will not be looking to short it just yet. Depending on what Janet Yellen will say, maybe they will decide to raise interest rates. But again, the central bankers sort of have their hands tied, and they cannot really raise the interest rates too much because of the pressures from the economy, etc. All right, moving on to the currency universe, and I wanted again to point out that next week there's quite a bit of events, especially Mr. Kuroda will be speaking on August 23rd, which is, I believe, a Monday, actually. Oh, it's Tuesday. That's a Tuesday. Okay, so there's quite a bit of market moving events that will have repercussions, especially if you trade in currencies. Now, my prediction for next week is I don't think we'll close below 94.05 by next Friday. I think we'll either move sideways or actually move up a little bit for the US dollar index. On the weekly time frame, I redrew this chart a little bit because I thought that initially this could have been like up to here, maybe a cup and handle, but it's possible now we have a double bottom formation of some sort. And if we kind of continues higher here, then we could break out, and at the very least there could be a move around 9%, which is the depth of this pattern, or it could be even higher, which is about like this much, like, let me see how much that is. This could be maybe like 11, 12, 14% move from here. So it will really depend, but at the very least I can see a minimum target of around 9% move up from here if we break out above 100, above these highs. Okay, so this is euro versus the US dollar. So if you trade currencies, that's kind of important stuff here. Euro versus dollar, this is a weekly time frame. We have euro kind of attempting to get to the previous resistance lines here at around, what is it, 1.145 or so. But I think even bigger resistance is around here at 1.711 or so. So there's going to be this resistance zone here from previous peaks, and from this peak and from this peak. So if this was like a minute chart or a 5-minute chart, then you can see that there's a drop and then a bounce and then another drop, a bounce, and then another drop. Now, right now, it looks like we have possible higher low, so we have maybe a series of higher lows, but so far I have not seen a higher high. So right now, maybe this is like a flat consolidation. And after such a big drop, this flat consolidation calls for further downside. So again, looks like we're heading up here, and unless we break out above these levels here that I just pointed out, I think we may roll over and continue lower. And again, this is a weekly time frame, so this looks like a very longer term patterns that are taking shape. And again, next week and the week after, there's going to be some market moving events that I just mentioned that could weigh on the euro, and alternatively, it could shift a balance of power towards the US dollar. In other words, euro will be rejected at this level and dollar will gain. Here is a great GBP versus the US dollar, British pound versus the US dollar. Well, this is clearly a downtrending security, and this is a 30+ year lows. But here on Friday, I want to point out that this week maybe we had an outside reversal. In other words, the previous week is completely engulfed and overshadowed by this week's candle, and this was a strong candle. So it is possible that British pound will rally. And actually, I was saying that after the Brexit that we're way overextended to the downside, and this target, which was about 9%, was already met. So it only makes sense to have some sort of a bounce. Possibly to the broken support at around $1.38. So maybe we see some bouncing in the British pound, but the bigger trend I think is down, especially on the weekly time frame. Here's another one of those interesting charts. I keep pointing out the Japanese yen. It's just a very interesting chart. It is possible that I was wrong, and indeed we are not going to hold support here. I thought that we're going to be holding support because we had quite a bit of things happening here, but this week we closed below this level of 174. We're at 119, so it is possible we got a support break. Now again, I said next Tuesday, in just a few days, Mr. Kuroda of the Japanese Central Bank will speak, and this will almost a guarantee there will be movement in the Japanese yen. So right now, the Japanese yen is getting stronger and stronger, and that is not what Mr. Kuroda wants. Mr. Kuroda wants the yen to be weaker and weaker. So again, I'm not sure what he has up his sleeve, but it's entirely possible that they're going to, intervene and print more yen, and this may reverse the trend that is down right now. Finally, again, I want to point out this is US dollar and the daily time frame, and I just want to point out that this is the level here at 94.05. That is a low of this week. I don't think we will close below this low next week, and just my little bit prediction for next week. And I just want to clarify that what I'm saying is next Friday. I don't think Friday we will see a close below 94.05. We might get intra-week fluctuations, but on a Friday closing basis, I don't think US dollar will close below 94.05. Again, this is all predictions. All right, we're getting to the subject everybody wants to know about, gold. Where's gold going? I think this is a bullish chart again. As I kept pointing out, we had a very strong move here. We had a breakout and 52-week highs, but gold is traded in US dollars. So again, if we get a stronger dollar, we could see a drop for gold. And in any case, even if we don't see a stronger dollar, I think gold is a bit overextended and it needs to correct some. This is a weekly time frame. You can see quite a bit of resistance in this area here of around 1360, 1350. Just gold so far is not really able to penetrate above it. But then again, it doesn't really want to drop too much below. So looks like $1,300 is a decent place to retest this breakout right there. If that doesn't hold, there's a lot of support, down below. There's lots of support, maybe at 1240, and even maybe at a very strong support around 1200. So if we don't hold here, then 1200 would be a very strong support level to watch. Here's a longer term time frame. This is weekly, and I just wanted to show that there was lots of breakout attempts for gold, and only the final one succeeded. So over the 5 years, however many years, there was a lot of attempts by gold to break out, but only the final one so far was a true one. And as far as GDX, the gold miners ETF, this one actually corrected more than gold itself. Even Friday we dropped 2.57%. So this is 52-week highs. This is extremely strong move. This is 31.79 and it went from all-time lows of around $12. It almost tripled. So by any means there's some sort of a rest is needed for GDX. This is again for illustration purposes. I wanted to show that there was a lot of breakout attempts for GDX together with gold, and only the final one so far has succeeded. And I think we're back in the bull market for gold. Another one of my proprietary indexes here is Gold Breadth Index. Again, only the final one succeeded here. The rest of them were not successful. As far as my prediction for the week ahead, this is GLD. I don't think I don't think next Friday we will close below this level of around what is it? See, for around 126.95. I don't think we'll close below this level next Friday. Again, this is my prediction, and I would say about 80% probability that this will not happen. All right, going deeper into the commodities universe, this is natural gas. I think this is a bullish security, and this became a bullish security after this breakout here. Looks like we got a breakout above 250, made 252-week highs, and then consolidated and then corrected down some. So this week possibly we are finding support at around $2.50, and this would be a logical place to find support. Now this Friday's candlestick, this is a weekly candlestick. It's not particularly inspiring, but nevertheless, maybe this is consolidation at the support, and then we'll continue higher from here. This is a daily time frame for natural gas, and you can see that same $2.50 resistance area breakout, 52-week highs. Now a pullback within the bigger uptrend. But again, this Friday, maybe this is a reversal, almost a bearish engulfing. So maybe we see more consolidation or possibly down move for natural gas. And to finish off commodities, this is West Texas Intermediate, light crude oil, and a daily time frame. So big rally here. This was what, let me see, like 20% of the lows here, 27% actually. So big rally. This could be a V reversal, but how common are V reversals? They are not that common. So this is very overextended in my opinion, and certainly could roll over with vengeance and then break this level again. I'm keeping my mind open. So right now, here's the way I read this chart. We came down really hard from a very, from about, what is it, $110 here. Came down very hard, bounced, came down, bounced, came down. So now these are multi-year lows. And so far, we had several, things that happened on this chart. So far, I'm seeing lower lows and lower highs and lower lows. So far, I have not seen a higher high. This is possibly a higher low, possibly, because it is also possible we turn around and make and then head down again. So right now, I'm treating this as a possible higher low, but there's a lot of resistance here. And last time we were rejected here at around what is it, $54 or so. And again, I pointed this one out. If you view some of my previous videos, that's exactly where we got reversed, right there at around $54 $53. The reason being is because there's a lot of things happening at that level, which is a bunch of candles right there, another couple of candles here, a breakout attempt which ultimately failed, breakdown, and then again another attempt to go above this $54 level, and yet another attempt here in June. So there's a lot of things happening at around $53, and when there's a lot of things happening, that means we can expect resistance to continue there. So I would not be surprised again if we maybe see another spike, an intra-week spike, kind of like what we see here, and then we turn around and head back down. So again, I'm keeping my mind open. Possibly this is a bullish chart, but as of right now, I'm treating it as a bearish chart. Anyways, if you like what you're hearing, please consider signing up at MasterChartsTrading.com and stay tuned of how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.